For anybody who's been investing for any significant amount of time, we've all had that experience where we're opening a new trade, or perhaps we're closing an existing one, and we look back in hindsight and think to ourselves, man, it would have been so much better if I executed my trade earlier in the day, or maybe later in the day was the best price. Investing is already emotional enough, even in the best of times, but it can make things even worse if we're always looking back and second-guessing the timing of our entries and exits. So in this video, I want to share with you my personal technique that just ensures I don't ever have this buyer's remorse. Let me tell you what it is. So the simplest solution to this very common problem of second-guessing the timing of our trades, for me personally anyway, is I always execute the vast majority of my trades at or near the market close. So if I'm trading something like an option spread, for example, that does require me to manually input those limit orders to get the best fill price, then I'll give myself a few minutes, maybe 10 to 15 minutes before the market close to start fishing for the best price. If it's a basic stock or an ETF trade, for those I find it easier to just use market on close orders. It just takes a few seconds to input the trade order. That can be done at any time throughout the day. And then at market close, the order will just execute without me having to do anything myself. Now, I understand that this may be something that not everybody can do. My job is to be immersed in the markets every day, so it's nothing to me to be near my computer at market close. I am nearly every day. But some people may have jobs that just don't allow that freedom, or maybe family commitments or hobbies perhaps. So there may be reasons why you can't do this. And in your case, it might just be easier to use market on close orders for the simple stuff like stocks and ETFs. And then for anything more complicated like options trades, for those you would just input them manually whenever you have the time throughout the day. It's a really bad idea to use market orders for options, and it gets exponentially worse the more legs that you add to the spread. So a simple put or call may not be that bad, but put spreads or call spreads that have 2 legs, it's not a good idea to use market orders for those. And for something like an iron condor with 4 legs to the spread, definitely don't use market orders for those. But this isn't a recommendation. This is just how I personally deal with the issue. So let me go over 3 reasons why I like to execute the vast majority of my trades as close to market close as I can. Starting with the first one I already touched on, emotional stability. That feeling of second guessing the timing of our entries and exits. Now, if it just happens a couple of times, it's really no big deal. But the longer you trade, inevitably you're going to hit one of those statistically bad streaks. One day you'll exercise early, and it turns out the best price was later in the day. So the next day you'll learn from the mistake and exercise later, and wouldn't you know it, the best price was early in the day. If you get 4 or 5 of these in a row, it can really start to be an emotional drain. So for me, exercising my trades at market close is just one less stress that I'm putting on myself. It certainly doesn't mean that I'm going to avoid the randomness of daily pricing. Of course, nobody can do that, and there's plenty of times that the end of day turns out not to be the best price. But it just means that there's no second guessing because the decision was out of my hands. Whatever the price is at market close, that's the price that I get, and it is what it is. The second reason I like to do this is, the vast majority of data we have is for end-of-day prices. Now, opening prices have a fair bit as well, but the vast majority is for closing data. It's very difficult to get historical data for intraday pricing. So for me, as a person who is an investment strategist, when I'm building and testing systems, most of the time I'm using end-of-day data for that. That means it makes more sense for me that my live trades are also the same time of day, so I'm always comparing the same data points. Now, in the long run, it's not going to be significantly different, so you don't have to do this. Some days you'll win, some days you'll lose, but it should equal out more or less the same in the long run. But I'm a math geek, a quant-style trader, so for me, any discrepancy in data really does bother me. So I like to keep things consistent, and exercising as close to market close just makes the most sense for me. And the last reason I'll give you is again more personal to me, but I do feel it's important. Because I actually reveal my trades in a fairly public manner, I do think it's important that I'm potentially the last person in the chain to get in or out. Now, they aren't trade recommendations, they're not advice or anything like that, but in the financial industry, this is called front running. It's when a manager gets into a trade before their clients do. You can see that in a market where supply and demand does play a significant role in pricing, that there may be a conflict of interest here. So for anybody out there, whether you are or you aren't subject to official regulations, it's just a good idea to follow what would be considered compliant were that to be the case. So those are the 3 reasons why I personally choose to exercise as many of my trades as possible at or near the market close. So just to recap, first of all, it is more emotionally stable because I don't have to second guess the timing of my trades. The decision has been taken out of my hands, and whatever the price is at that time, it is what I get. Secondly, it's also much easier to make improvements on my existing systems, as well as designing new ones, if all of my data set that I'm looking at, both live trading and historical that I may have to compare to, are all using the same end-of-day data set. And lastly, whether it applies or not, it's just a good thing whenever trades are being mentioned publicly to try to do the best you can to be ethical and fair and not do anything that would resemble front running. So if you have any questions at all, don't ever hesitate to shoot me an email. I'm always available for a good conversation. Thanks for watching. So go ahead and click the link right here, sign up for the VTS newsletter, and when you do, you're going to get full access to all of my trading strategies for a full month absolutely free. And if you are new here, please consider subscribing to my channel. Also, if you have any questions or comments, I'd love to hear from you. So go ahead and leave those in the comment section below. See you next time.